Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started.
Hello, and welcome back to another episode of Alternative Investments Chat. Today, we are talking about some more real estate related stuff. And we're diving deeper into that world.
Yep.
Now, when most people think about real estate investing, they typically think about houses, apartments, office buildings, right? Mm-hmm. But today we're talking about something that's just a little bit more fundamental and a little bit more naked.
Yeah.
Raw land.
That's right. Now, let's be honest here. When someone says raw land investing, what pops into your head? For me, I picture like an old-timey Western opening scene where like the little tumbleweed goes, down across the screen. There's the little cow skull or coyote skull or whatever skull that's just chilling in the dirt, But here's the twist. Raw land is one of the oldest forms of real estate, yet it's often misunderstood, underused, and overlooked by both everyday investors and institutions.
Yep.
So raw land actually has quietly made a lot of people rich. But first you have to understand what this investment is and the strategies behind it. So let's get digging into her. I know I was going to bring a shovel, but I was like, our production team is going to be like, can you please stop bringing props for every single one of yours? And if I come walking in with a shovel, I live in an apartment. I don't have a shovel. Give me a break.
Oh, I have one. I should have brought mine. Well, raw land is defined as the land that has not yet been developed or improved for commercial or residential use. Sometimes it's referred to as vacant or undeveloped land, and it typically lacks infrastructure such as roads, utilities, or buildings, making it a blank canvas for future development. I like to think about raw land as land in its factory settings format.
I like that.
It's very low effort, not a lot of drama.
None.
It's just a plot of land, chilling. Raw land can come in a lot of different forms, such as rural acreage, desert parcels, farmland, timberland, or timberland. Sorry, now I'm gonna sing a Timberland song. And even land on the edge of growing cities.
Yeah. So if there's nothing on this land, however, then what brings in the money, right? So why would investors want a piece of land if it's just sitting there? Well, let's explain this. Investing in raw land offers several benefits, such as low entry costs, the potential for high appreciation, and fewer management responsibilities compared to developed properties. Again, we'll talk about that in a second, but those dirty 3 T's, right? When you are a landowner or when you're a landlord,
the dirty 3 T's.
Dirty 3 T's.
That's like Tucson. People call Tucson the dirty T.
No, that's funny though.
Yeah, dirty T.
That's hilarious. So anyway, raw land tends to have fewer complications like the tenant management, making an attractive option for passive income seekers. So investors can actually also benefit from tax advantages and the opportunity to develop the land in alignment with the market demands.
Yeah.
So that's always nice.
Exactly. Compared to residential or commercial property markets, raw land investing generally faces less competition. Many investors overlook land investment, which can lead to unique opportunities for those who are willing to specialize. This lower competition can result in better purchase prices. Love that. And higher potential returns. Also love that.
Yep.
Particularly in emerging markets. I actually learned something from my neighbor the other day.
Oh.
The one who lives right next to me. He apparently owned the plot of land that my house is now built on.
Oh, good. Can he tell you if there's a sinkhole since you have a leak and we can't figure out where the heck it's leaking?
Yeah, he doesn't know anything about that, but because he did sell it like in the 80s. But pretty cool because, he made a big return on it. And now my house is sitting on that raw land that he purchased long ago.
I love that.
But raw land significantly appreciates over time, especially in areas that are experiencing urban sprawl or economic growth. As cities expand, underdeveloped land can transition into sought-after real estate, leading to increased property values. People gotta go somewhere, right? And investors who take the time to conduct the research to identify such growth areas, they can predict, maybe where the city is going to expand into next. They can capitalize on this potential appreciation, turning their initial investments into substantial profits. So let's actually take a moment to talk about some real life success stories.
I think that's actually a great idea. So one of the biggest misconceptions about raw land is that it just sits there doing nothing, just like we said earlier. Why would you want to invest in it if it's just going to chill? And sometimes it actually can be true and it can sit there for long periods of time, but real people are building entire businesses selling dirt.
Yeah.
In fact, that brings us to Mark Podolsky, aka the Land Geek. He's here in Arizona. So
Very
Mark
cool.
was actually an investment banker who was on the verge of burnout. He hated his job. He was just longing for an escape. Just going in, clocking out, hating life, right?
Yep.
A colleague actually introduced him to a very unconventional side hustle, buying raw land at tax deed auctions, and then they were reselling it online. And the coworker said he was making 300% profit.
Crazy.
Well, Mark was, he's like, sure, dude. Cool story, bro.
Yeah.
But he was actually very intrigued. So he took $3,000 of his own money that he'd actually set aside for a car repair, and bought 10 half-acre parcels in New Mexico for just $300 a piece. He ended up selling each plot online for an average of $1,200, achieving that 300% profit.
Crazy.
Now, it wasn't just a fluke either. So he replicated the same strategy in Arizona. And it didn't take him long to finally realize that making over $90,000 proving land investment could be lucrative business. He's like, deuces to the investment world in this stupid bank. I never want to clock in again, right? So he left that job. He now has a podcast, a book called Dirt Rich, and a highly successful investment company or land investment company called Frontier Properties.
Very cool. Well, I'm definitely going to be adding that book to my reading list this year.
Yeah.
Mark is not the only person, though, that is taking advantage of this unique asset class. Even billionaires are playing in the land game. The Land Report analyzes records and transactions and releases a report of the top 100 landowners in the United States. And it may come to no surprise that Microsoft co-founder and billionaire Bill Gates tops that list as the owner of the most farmland in the United States, with over 260,000 acres in private agricultural land.
That's just agricultural land, everybody. So if you
Crazy.
actually look down the breakdown of his numbers, he has a lot more, and he has tons of different kinds of lands, but it's just wild to me.
Nuts. And Jeff Bezos owns about 420,000 acres of land, including a 165,000 acre corn ranch in far west Texas, which serves as a launch site for Bezos' Blue Origin rockets.
Yeah.
Haha.
Yeah.
While Gates and Bezos are names that we both recognize, we know, the top 10 landowners in the United States are individuals that most people have likely never even heard of. Some of these families have owned agricultural land and corporations for generations, dating back hundreds of years. And they obviously have seen that this is a profitable asset that never goes out of style, or so it seems. But I guess that leads us to the pros and cons.
I think you guessed right there. So while those success stories sometimes make it like you want to jump on the raw land bandwagon, because it convinces you that it's really easy to invest
Sure.
and but there's always two sides of the equation, right?
Yep.
So again, we'll recap those pros that we just talked about, and some of those key benefits are low maintenance. You don't have to worry about the dreaded 3 dirty T's, toilets, tenants, and trash. There's the potential for appreciation. If you get growth near expanding cities or infrastructure can drive up that value. I'm sure your guy next door sold that piece of land for a good chunk of change. And then a pro that we didn't really talk about is leasing income. So if you purchase agricultural land, you could potentially lease it to farmers, ensuring constant cash flow. Again, they're going to rent it. We did a whole episode on farmland. And a lot of people own it and then rent it out to the farmers and let them deal with all of it, right?
Exactly.
And then lastly is a pro that we often see in the alt space altogether, that inflation hedge.
Yep.
So tangible assets often keep pace with inflation better than cash does.
Yep, exactly. And like some other asset classes that we have covered on this podcast, raw land investing carries very specific risks. Understanding these risks is essential for minimizing potential losses and making informed investment decisions for your portfolio. Up first, we have market fluctuations. Market fluctuations can significantly impact the value of raw land. You have economic downturns, changes in interest rates, and shifts in demand that can all lead to decreases in property values. Investors should be prepared for those fluctuations and consider long-term holding strategies to weather temporary downturns. You might be stuck with this land for a little while.
Yeah.
Are you going to be able to hold on to it and hunker down?
Yeah.
Next is zoning regulations. Zoning regulations can restrict how land is actually used, affecting its value and potential returns. Investors must research local zoning laws to ensure that their intended use aligns with the actual existing regulations. Failing to understand zoning restrictions can lead to costly mistakes and limit development opportunities for the land that you actually own.
Yeah.
This is one that I didn't really think about, but until looking into this asset class a little more. But environmental concerns, which, it's land
I know.
out in the environment. Environmental issues such as contamination or protected wildlife habitats can complicate raw land investments. Conducting environmental assessments and understanding the land's ecological context is super crucial for avoiding legal and financial pitfalls. Investors should prioritize due diligence to identify any potential environmental liabilities before actually making a purchase.
Yeah, I never really thought about the environmental aspect either because, again, I saw the tumbleweed.
Yep.
Like, you just think of dirt,
Yeah.
just like an open, flat land. Not all land is like that. I'm just used to it because we live
In the desert.
in the desert.
Yeah.
So, but did you know that there's another con about securing financing? So lenders often view raw land as a high risk investment since there are no structures or improvements that can be used as collateral. God forbid you don't make a payment. They can't say, well, just give me some of the sell the building and you can pay it off, right? This often results in a higher down payment, stricter loan terms, and potentially higher interest rates. And I have one more little con to add to the list, and it's the lack of that immediate cash flow.
Right.
So unlike other assets, raw land typically does not yield consistent income, making it harder to realize profitability quickly.
Yeah.
Again, you can't just sell this in the middle of the night at 2 a.m. on your couch in your pajamas if you decide that you need a little bit of money. And again, we always encourage you to do your own research and your due diligence before purchasing anything or investing in anything because you need to make sure that you can pay your own bills first before you have to go, selling off your raw land.
Yeah, exactly. And, raw land investing is not for everyone. But if you are an investor with a long time horizon, a tolerance for illiquidity, and a plan based on growth, development, or land banking strategy, it might be something to consider to diversify your portfolio. Now, let's break out that crystal ball and take a sneak peek into the future. The future of raw land is being driven by three unstoppable forces: people, power, and pressure. We had the dirty T's, now we have the dirty P's.
Yeah.
Let's start with people.
Got it.
People keep showing up and they need all the things, lots of things: houses, schools, warehouses, hospitals, coffee shops,
Targets.
Costco's.
Yeah.
Well, guess what all those things need? Land.
Yeah.
Cities are running out of space inside their borders, and so growth is being pushed more and more outwards.
Yeah, that's right. And it reminds me, like, when I go back to, like, my college hometown. Not my hometown, but I grew up in my college town, basically, where I learned to be an adult, kind of. I'm still working on that part, but we're getting there. But anyway, you drive around and you, like, see all these things that are this new thing. You're like, that wasn't there. That wasn't there.
Yeah.
Oh, my gosh, that used to be out in the middle of nowhere.
Right.
And now it's like the middle of nowhere is becoming the middle of town.
Right.
Somehow. Okay, so the next one you said was power, right? So renewable energy projects, think solar farms, wind farms, and the such. Well, they are absolute land hogs. They need
Yep.
all the land. The sun needs acreage and is very willing to pay for it. Same goes for those stupid data centers. I say stupid. It's just that they're ugly buildings.
Yeah.
AI, cloud computing, streaming services. While we always kind of think they live up in the air somewhere, that's not really the case. Those data centers need cheap land, power access, and room to expand. And then you mentioned pressure. So what kind of pressure are we talking here?
Yeah. So regulatory pressure, zoning restrictions, environmental reviews, limited buildable land. So even if demand explodes, supply can't necessarily keep up, which can quietly boost the value of land that's already entitled, that you have in your hands. Raw land used to feel risky because it was kind of a guessing game. However, now investors have access to satellite imagery, zoning maps, demographic data, and infrastructure plans. So you're not just buying dirt in the middle of nowhere like this guy who in the 70s bought where my house is in South Tempe. That's like the middle of nowhere.
It is.
At that time. Now, instead of doing that and kind of crossing your fingers, you're actually making informed bets based on the information that you have at your fingertips.
Yeah, and if you ask me, database strategies are a little bit better. I kind of like to have some facts to back up before I
Facts are
start
good.
throwing out money.
Yeah.
So now, and again, not everyone can actually drop six figures on acreage. However, and you've guessed it, that is changing too.
Yeah.
So fractional ownership platforms are letting investors own slices of large land deals. So so instead of actually buying 100 acres, you own 1% of 100 acres. Same thesis, smaller check size, but very on brand for the modern investing era right now. The one thing that we do want to remind our listeners, as always, is that raw land is an anti-day trade, okay? It's not something that you just flip quickly.
Sure.
It rewards patience, vision, and restraint. So, which is the kind of refreshing in the world today that is so hung up on instant returns, instant gratification. Where's my Amazon? Same day delivery.
Exactly.
And so it's kind of nice that you do buy something or you can invest in something that's going to be a little bit longer, but it's fun. Like I'm sure your neighbor loved telling you the story of that piece of land that he bought.
Oh, he sure did. He's a funny guy.
I love that. And that brings us to the end of
Yes.
this wonderful episode.
It does. And, I have to admit that raw land is actually way more interesting than I had initially thought. Dirt is truly underrated. Raw land isn't just empty space, it's room for possibility. And it can be held, flipped, leased, improved, or developed. And the path that you choose depends on your goals, your risk tolerance, and your timeline.
Yeah, remember, once again, it's not for everybody. You must do your research to ensure you're making the smart investment with this asset class and with all of them.
Yes.
Do your due diligence, people.
Exactly. Well, as always, thank you for tuning in. Check out our episodes on YouTube, and you can listen wherever you get your podcasts, obviously. Thank you, and we'll see you next week. Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the alternative investments chat. See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.